Guys, right here on my screen, I have a list of 30 or 40 videos I'm still yet to make on this bootcamp series. If you want these videos, I will be doing them. However, I need more support. Guys, I'm giving you so much free value. These videos should all be doing 2 to 3k views. I don't understand why they're not. And it's getting me angry because if I was in your situation wanting to learn how to trade, I would literally be watching all of these videos, taking the most insane notes and learning so much, because some people who are actually taking notes and taking this bootcamp video seriously, they are literally getting funded. And I've had DMs saying that this bootcamp is literally changing people's lives. So you guys need to take it more seriously. I'm giving you so much free value. You need to take it seriously. So before this video starts, everybody like the video and subscribe and leave a comment. Leave a comment of what you want me to actually make a video on, and I will do that. Okay, but before I get into the video and before I continue this series, guys, you need to actually start taking this seriously, because I want everyone to do well. And if you're not taking this seriously, there's no point me doing it. So like the video, subscribe, and then we can actually get into the video, which is about supply and demand. And guys, supply and demand is literally one of the most important things in trading. If you don't understand supply and demand, you won't be profitable. Okay, it's what I've used to go from 0 to 500k funding in less than a year. With supply and demand, I was able to move to Thailand at 20 years old, travel all around the world. I've been in Thailand now for 8 months at the age of 20, living in villas and literally living like a king, all because of supply and demand and having a good strategy. So you guys can do the same. All you need to do is understand supply and demand, and I will be explaining it to you in this video. And by the way, guys, I have a free community with over 1,000 members in there, literally trading live with me every single Friday. And if you want to join that, all you need to do is press the link below. It's completely free, and you're going to literally trade live with me every single Friday, okay? The link's below. And let's get into the video and understand supply and demand, baby. Alright, boys, so yeah, let's go on the charts and I'm going to show you exactly how to understand supply and demand. Okay, we are not going to be doing anything too crazy, but to be honest, understanding supply and demand is actually quite simple. It doesn't actually require loads of brain power, and I think everyone will be able to understand it from this video. And then after that, I'll do a part 2 where I show you a bit more advanced examples. Okay, a supply zone, we're just going to talk about supply zones, then we'll do demand zone after. But a supply zone is going to be a zone which is caused from an area which gives you a change of character. Now, I've already covered change of character, so you guys will all know that the change of character in the market happens right here. Okay, when we break past this previous higher low right here. Okay, so when we break past this higher low here, okay, that gives us a change of character. And now we can use this because if price comes back into this area, we know that there's large selling volume, as this area here caused the change of character to the downside. So what we can do is we can expect that if price comes back into it, we might see some selling pressure again when it comes back into it. So that is essentially what a supply zone is. It's a zone which has given us a change of character to obviously the downside if you're looking for a supply zone, and if you're looking for a demand zone, it gives you a change of character to the upside. So you would literally just get out your box. I'll make it a lot more clear when we actually go into the charts, guys, but this area as a whole is going to be your supply zone. And what you can kind of expect to happen is price is going to eventually make its way back into this zone, something like this. And then when it comes into it, then there's going to be a big reaction of it again. And that reaction there is what you're looking for to take the trade, okay? That is what happens when you come into a supply zone. You can catch a trade like this. You would obviously enter maybe something like this with your stop loss. You normally want to cover the high of the supply zone when you are taking a trade from a supply zone. You want to cover the high just to eliminate any possibility for price to maybe fake you out a bit and come a bit higher into the supply zone and then go down. So if you draw your stop loss above the supply zone, that's very, very helpful, and then you should see a reaction from the supply zone. Obviously not every single supply zone is going to get a reaction from, but for the most part that's kind of what it will look like. You look for an area that's caused a very big reaction to the downside, so this area right here, which I'll actually mark out with this circle as well. Then we wait for price to come back into it like this, and then you would sell when you see your confirmations from here, and then it goes down. Okay, so simple really. I mean, it's literally just an area that causes a big move in price.
Does the supply zone does it only become a supply zone when it's been tested and you can see it go back in and reject from it again or go back down from it again?
No, so it becomes a supply zone as soon as it causes a big move down, right? Then it's a supply zone, because a supply zone isn't always going to get respected. So for example, price could have really good question, by the way. Price could have just literally gone through it, but it doesn't mean it's not a supply zone. It means it's not a valid supply zone, as it didn't work, but it still was a supply zone, and you still definitely want to draw it out. As soon as you see that big reaction on the charts, causing a change of character to the downside, that's when you want to draw out your zone, and that's when you look for sells when price comes back into that zone like that.
If you think it's going to go down, so you're looking for a sell,
Yeah.
if you catch it in the supply zone, you've probably caught it at nearly the peak, essentially.
Yeah.
Okay.
Yeah, exactly. Like, that's why supply zones are so helpful, because you're getting the best possible entry. You're not entering anywhere like before the supply zone. So let's say this box right here, this pink box is before the supply zone. You're not selling anywhere here. You're waiting for price to come up to the highest possible point. Yeah, and then you literally sell here, and you will be catching the top of the move, which is perfect. You don't want to be catching trades in the middle of the move. So you would never want to sell, let's say right here, because then you're selling, but there's still possibility for it to go higher and go up here, right, and then react. So that's exactly right, bro. You want to wait for the supply zone, so you're selling at the highest point, and then you would take the sell. It basically eliminates the possibility of price to go up any higher, unless you're wrong about the trade, unless the trade is literally just a losing trade, which sometimes it will be. For the most part, you've got the best possible entry. You're entering near the top of the move in the supply zone, and yeah, like that's pretty much it. So supply zones look like that. Now demand zones are essentially the opposite. So a demand zone is going to be prices coming down this time, and then what we're going to see is a change of character to the upside. Okay, so there's your change of character right here, like this. And when we see that change of character, price is then going to continue in its direction like this. Okay, and we can basically just draw out the zone down here that caused the change of character. Like I said, I will show you how to actually draw out this zone accurately when I go on the charts. But for now, that's what you would do, is you draw out the zone like this. Then what you do is you wait for price to come back into it. When it comes back into it, you know that this is an area where price is likely to go up from, and you can take a buy and expect it to go higher like this. Your entry would look something like, something like this. Your stop loss will be covering the low of the demand zone, maybe like that, and you can catch a trade something like that. Now, the other form of a demand zone is going to be from a break of structure. So as price goes up, you'll notice that, and I actually spoke about this in the market structure video, it's going to be pulling back, but it pulls back to significant levels where price has gone up to from before. So for example, right, this low here is the low that caused this high up here, right? Yeah.
Yep.
Yeah. So price is going to come back into it, and then it's going to go up from this area. Okay. Now, what you can understand from that is this is a demand zone because it caused a move up breaking past these highs here. Okay. So what we can expect is that when we see this break of structure like this, it's going to give us an area, just like I said before, from a change of character. The only difference is it's a break of structure, so it's with trend instead of going against the trend or showing a reversal. But this one is a break of structure, and the area that gives us the break of structure, we draw out, and we wait for price to come back into it, and then we buy. Then the same thing we can literally draw out right here. This is a break of structure, like this. Okay. Now the area that gave us this break of structure is going to be this area, something like this. Okay. Price will come back into it, and then you can expect the uptrend to continue. Now this kind of gives you a whole different understanding of uptrends now, because you can start to understand that it isn't just as simple as, higher highs and higher lows. The higher lows and higher highs in the market are formed from reactions within the demand zone. So you know, if I just draw out another uptrend right here, price goes up, but it's going to be reacting off something as it goes up. It may not be super clear, as this is literally just a random example, but as it goes down, it's pulling back into areas of demand like this. Same thing right here. It'll be pulling back into some sort of demand area like this, okay? Same thing right here. It will always pull back into some sort of demand area like this. And these are the demand areas that give us a break of structure back to the upside, causing a new higher high. So when price comes back into it, that's when you can look to take a buy. So let's imagine right here that, you know, price did come back into this area, something like this. What we can do is we would obviously be looking to take a buy from this area here, because this is the area that caused a break of structure to the upside past this high here. Okay, so there's obviously a lot of buying pressure from this area that caused a break of structure. You would take a buy when we come into here, and your stop loss would be covering the lows of the demand zone. You can target anywhere up here, and that would be the trade based off break of structures as well. So
at the end there, you're expecting it to go back up, yeah? So that's if you're... Oh, but it's already changed character at the top there.
yeah, so this would have changed character to the downside to come into the demand zone here. However, when you're seeing that change of character to the downside here, you need to understand that it's changing character to the downside on a lower time frame to pull back into a higher time frame demand zone like this, and then go up.
So that's a demand zone. At the top there is actually a supply zone, right?
Yeah, so this will be a supply zone up here as well. And it's actually a really good question, bro. And this is where a lot of people actually go wrong. They'll be looking for a supply zone here, but what they don't realize what's happening is they're not zooming out to the higher time frame, and they're not seeing that the lower time frame is giving us a supply zone up here. It's giving us a change of character to the downside here, and it looks like it's going down, but it's only going down to come into this demand zone to continue the higher time frame trend of being bullish. So so you wouldn't sell from the supply zone. You would be looking to buy from this demand zone and expect price to continue going higher to give us a new higher high, closing above.
But you wouldn't expect it to then respect that demand zone?
This supply zone? No.
That supply zone, sorry, yeah.
No. You wouldn't, because you got to think about it as... I know it's hard to see here because it's all on one...
Yeah, the longer time frame.
Yeah, so imagine that that this uptrend here that's causing the break of structure, let's say this is on the hourly chart, but then the pullbacks here, these pullbacks are going to be maybe on the 15-minute chart. We'll see a change of character to the downside, because the 15-minute chart will be giving us a pullback to come into the hourly demand zone, but that higher time frame is still bullish, right? The higher time frame on the hourly is still going up, whereas the 15-minute, of course, is going to change character to the downside, as it has to go down to come into a demand zone to then go higher. So yeah, I mean, bro, amazing question, and I'll show you some examples of this probably on episode 2. But yeah, really good example. And what you can do with this is that's when you need to have a really good understanding of using the higher time frame with the lower time frame, so that you can build a picture of what's going on. Because yeah, price will look like it's going down on one time frame, but only when you zoom out and realize what the higher time frame is doing will you understand why it's going down. And in this example, you're going down to come into this higher time frame demand zone to continue going up, to then break structure past the break structure again on the higher time frame, and continue the bullish trend which we were in, you know, as we were closing above high highs and high lows. But you know, every single time here you can see that there is a pullback. So for example, right here, bro, there'll be a pullback here. Like there'll be a pullback at this point here to come into this demand zone here, and there would have been a change of character to the downside here to come into here. But that doesn't mean that you'd sell. It means you need to understand the market has to pull back to go higher, and that's just part of trading, really. So there's always going to be pullbacks. There's always going to be a change of character to the downside into the demand zone, but you would be trading from the demand zone as your higher time frame bias, and the direction of the market is bullish. So you would be respecting demand zones.
You can also, so once you've changed character, then it starts to turn into an uptrend again.
Yeah.
Once you then actually beat that high, you can actually jump back to the previous trend, and that's now another break of structure from the previous line.
From this
right?
one
From the previous uptrend, you've broken structure again. Yeah.
Yeah, exactly. Yeah.
Okay.
So I mean, you can give me an example now. Like, let's imagine right here, okay, that this is now our new break of structure. What would you do if you wanted to take a buy position? What would you do here?
Are you saying as the market moves forward,
Yeah,
when
as
would
the
you look? When
as the
would you
market
take it?
continues going up, what area would you want to draw out to catch a trade from?
Draw that demand zone wider, and look for it to come back into the zone,
You
and look for it to turn up slightly again, so then you can see it's being respected, and then catch it as low as you can.
yeah, yeah, exactly.
But
So,
obviously, there's more analysis when you're actually a trader. Using these principles, yeah.
no, for sure. So yeah, what you would do is you would find a new demand zone in this area that caused this change of break of structure to the upside, right? Then same thing as before, price would have to go down to come into this, okay?
Yeah.
It has to change character to come down into here, which is totally fine, right? But when it comes into here, because the overall direction of the market is to the upside, you would be buying from here, expecting us to go and break past this.
But would you wait? Would you wait for some confirmation that it's actually going to respect it?
Yeah,
Or
100%.
yeah.
Yeah, for sure. So confirmations can be anything from wick rejections. Okay, so you can have a good wick rejection from this area. You could be seeing good buying pressure. You could see a change of character on the lower time frames from within this demand zone back to the upside, and then you take the trade. Now, this is when it gets really quite confusing because you're looking for change of characters within a bullish trend, which is breaking structures to the upside, which is changing character to the downside to come into this demand zone, and then you look for a change of character back to the upside on the lower time frame, and then it does get confusing. So there will be multiple videos on this and combining the higher time frame with the lower time frame, looking at change of characters within a demand zone to give you your entry. And that's kind of when you'll be able to see the best results, when you can combine everything. Okay guys, so what I'm going to do now is I'm going to go on my charts and I'm going to show you a real life example of using demand on a trade that I took on Friday. Okay, so literally last week I took this trade using the exact same concepts which I just taught to you now, and I was able to catch a really good trade. Okay, so yeah, what we can do, okay, is we can just understand demand zones from just looking at the charts. Okay, so forget about everything, all of these candles. It can get confusing, but just understand that this area here, right, I'll actually mark it out like this. This area here is the area that broke past these highs right here. Yeah, so this area would be your demand zone. Okay,
Is there a certain candle within that you would actually put it on, or the whole area?
yeah, so when it comes to drawing out your demand zone, what you want to do is you want to find the last bearish candle or the last down candle before the move up.
Right.
Okay, so in this case, there is a lot of down candles and there's also a lot of up candles, but you want to focus on the main up candle move. So the main up candle move for me on the 50-minute is going to be this candle right here, right? So this candle right here, clear like big volume from here, clear massive buying pressure. So I would look for the last down candle before the move up, just like this right here. Okay, so you draw it out like that. You draw your box along from the top of this candle's wick right here, right, to the bottom of the wick like this. So if I just zoom in actually, and I'll actually change my colors so you can actually see it all. But you see here, right, the top of the wick looks like this, right? So the top here, you draw out your box from the top to the bottom of the candle, so the lowest point it went to, so the lowest wick, so like this, and then you drag it along, and that will be your demand zone. Okay,
Right.
so then what you do is you wait for price to come into it. Now, I didn't take this trade here. There's multiple reasons why I didn't take this trade here, but the only one you need to, and to be honest, you don't need to know this yet because it's not, I haven't taught it to you, but what I'll say is there is certain times to trade in when you're trading, right? And this tap here into this demand zone happened at 6:15 a.m. in the morning, which is way too early to trade. There's no volume at 6 a.m. So I did not trade this one. But what we then saw is price then came back into it. Then we saw confirmations. We saw good rejections from this area. I took a buy, something like this. Okay, stop loss below the lows, like I said to you guys before. And my target was actually this high up here. Okay, which is Asian high liquidity. Which if you've watched over my liquidity videos, you'll understand why I'm targeting these levels. And if you haven't watched that video, go and check it out. I'm probably going to leave a link at the end of this video so you guys can watch that one next. But that is a literal real life example of me using a demand zone in trading. And it was a really good trade using simple concepts, simple demand zones.
After identifying that demand zone, were you just watching until that market dropped into it again? Were you just waiting for it and seeing how it reacted once it reached it?
Yeah, bro. Yeah. So literally, it's just a waiting game. It's just about waiting now for price to come into your demand zone and do nothing else until it comes into it. So yeah, it's really good. It helps you to be patient because you have your areas marked out at the start of the day, and all you need to do now is literally just wait for price to come into there. Until it comes into there, you don't do a thing. And only when it's in there, that's when you look for your confirmations on the lower time frame. That's when you start to take a trade. But until it comes into there, you're not doing nothing at all. Okay? So yeah, I mean, bro, amazing question again.
Because you're almost, I guess, if you don't have that, if we're just looking at this way of analysis, you're kind of playing in no man's land. You don't really know what's even going on in the market, unless you obviously probably know more stuff. But anyway,
no, bro, 100%. Like having this zone marked out gives you some sort of structure when you're trading. Because like if you get rid of this now, like you just don't know where you're gonna buy from. So you are literally in no man's land, like you said, bro. Like it's actually a good way of putting it. But when you have that on, now you know what you're looking for. You're looking for this area here, and it makes trading so much easier. It's a really simple thing. Like everybody understands supply and demand zones, but not not everyone can actually put together a strategy and understand what to do when you have these zones marked out. And that's why people fail, right? They don't have a good strategy. They're not able to put things together. They just draw out random supply and demand zones without understanding other concepts, and then they don't see results. But it's about putting everything together, right? Having these zones, having good entry models, understanding liquidity, and then you'll start to see results, okay? So yeah, I mean, amazing call, bro. I will be putting out a video on supply and demand part 2 very, very soon on my channel, so stay tuned for that. I hope you guys enjoyed this, and if you want to join my free community, I trade live every single Friday for completely free with 1,300 members in the free community. All you need to do is press the link below, sign up for free, and I'll see you in there. Okay, other than that, guys, thanks for watching, and thank you, Bruno. I'll see you guys soon.
Yes.
Bye.
See you.